real estate investment trust and crowdfunding.
Yes.
How do you compare and contrast them? Which one has higher or lower risk, equity, return from your perspective?
Yeah, so it's a good question, right? So we consider ourselves very different from a real estate investment trust for a couple of reasons, right? So real estate investment trust is for people that don't know, it's typically a publicly traded fund that has a basket of real estate exposure to it. Mainly, in Dubai, there's two publicly traded funds, Emirates MBD REIT and Emirates REIT. They typically have a basket of commercial, residential real estate, but there you are giving money to a fund manager. So you don't have discretion in terms of where your money is being invested and how the money is being invested. You're giving money to a fund. The fund manager makes a decision. A lot of that is also a lot of financial engineering, where there's a lot of leverage involved in that and so forth. Real estate investment trusts became very popular, in the 80s and 90s, and they do really well in developed markets where you have sophisticated tax structures and so forth, because there's a lot of tax benefits of leveraging the assets, doing a lot of depreciation, tax write-offs, etc., and so forth. And a lot of financial engineering play goes into that. In Dubai, we don't have corporate tax and so forth. So, the REITs don't necessarily provide that much of a benefit. Plus, if anything happens to the stock market, the correlation to REITs versus stock market is relatively similar. So if the stock market goes down, the REITs might also get hurt, etc. Whereas what we offer is direct access to properties, right? So it's like private properties. So the stock market can go up and down, but this is completely separate. So it gives you further diversification. The correlation between private real estate versus publicly traded funds is to public equities is very different. So if you look at even the wealthy, the wealthy will have some allocation to real estate in a publicly traded real estate fund because for liquidity reasons, but they will have a lot of allocation to private real estate that is not liquid. And there's a reason for it's not liquid, because it provides you further diversification in your overall portfolio. REITs typically will be they are more liquid in theory than private real estate. So, but liquidity comes at a cost. So if you look at the comparison of performance of the two REITs in Dubai, they haven't done quite well compared to what the market has done overall in terms of the Dubai real estate market. And the reason for that is because you're not only getting exposure to real estate, you're getting exposure to interest rate risk, operational risk of the fund manager, the fund costs, etc., and so forth. So the risk reward hasn't been there for REITs. And this is one of the reasons we thought we believe Smart Crowd offers a better alternative than the publicly traded REITs, at least for this market.